Okay, Zheng says, okay, I will take some questions, Gabi. Is that okay for now?
Yes, let's go for it. We'll
Okay.
very continuous, yes.
Zheng says, for the put case, insurance just protects you from losing too much, but you still lose money if markets drop. Yes, for sure. That's a choice, okay? Now, if you have the stock and you protect yourself, you will lose if the markets goes down. But Zheng, just think about if you don't have any stock, and what I just told you, if you have the call and the put in a certain way, you could overcompensate. Or even if you buy a bigger put and a smaller call, you could even profit from a downturn if you want to. So you can but that is for trading purposes. Okay, I will show you, I will teach you how to profit from a drop if you're interested in that. I will. But my first how you say that, the first part that I want to do is to make sure that you not lose money. Okay, the 80%, you need to grow at 8% a year. This is the first thing. Over time you will make money. Okay, I know that you want to be rich and quick and as soon as possible. That's possible, but there's also a huge risk involved. Okay, so you need to make sure that you don't lose your shirt. Okay, you should have to do it in a clever way. Okay, so yes, I'm going to teach you both, but the first most important thing is the defensive portfolio. Let's start with that, and then we go to making more money if markets go down or up. We take on the trading part. Okay, more questions. Is the insurance company also bankrupted? Oh yeah, that's a good one. What if the insurance company also goes bankrupt during the corruption of the market? Well, point is this: if you buy a put, okay, you buy it on a stock exchange. Now, who or what is the stock exchange? The stock exchange exists because there are members. And who are the members? The big banks, like the ING, the Rabobank, the ABN AMRO Bank, all the big banks and all the big brokerage, they are the exchange. So if one of these guys fall down because of bankruptcy, the rest has to pay for it. So if the whole system collapses, that could happen, but then you lose your money in the bank. You will probably have a big problem because all the economy is imploding. Okay, so that you are fine. This the put option you buy, this insurance, is for sure. Okay, as long as the stock market exists, as long as the members, the banks exist, you will be fine. Okay. Regarding the put part, but who will buy it if the company goes bankrupt? Well, no, that's a good point. But you can. That's a good point. If you buy a put, you have the right to exercise, and the right to exercise, somebody else took the other part of this trade, and they are obliged to compensate you because that's the deal. I mean, if your house burns down, who is paying? Well, the insurance company. Why? You pay the premium. So they have the obligation to compensate. And that's the same with the put option. If I buy the put, I have the right to sell. The counterpart has the obligation to buy whatever the price is, whether it's 0 or 10 or 28 or 26. If I exercise my put, and that's definitely what I will do, if I exercise my put, the other one has the obligation to do it. Okay, so that's my counterpart. And the counterpart is not Mr. I don't know who, Mr. Tom. No, it's not Mr. Tom. It's the bank. It's the member where Mr. Tom is banking, is having his bank account, is having his account. Okay. Okay. Well, Yixing is lost. Tell me, Yixing, why are you lost? Because I want to help you. Why are you lost? Where is it that you lost me? That I lost you. You lost me. No.
I noticed her message was given while you are talking about the buying the put and the call option in the same time. But,
all right. Okay.
Yeah.
Yeah. Again, I told you this is maybe to come. Yeah. Okay. One more time. Okay. The put option. If the market goes down, the put option goes up. Just try to understand that. If your value of your house goes down because of fire, the worth of your insurance premium goes up. So if the stock goes down, the put goes up. Okay? Now, that's one part of the equation. The other part was I buy a call. Now, a call goes up if the stock goes up. So if the stock goes up, my call goes up. If the stock goes down, my call will go down, but it is a parachute. It will be not going down as much as my stock. Okay? So on the one hand, if it's going up, I make money with my call, but I lose with my put. If the stock goes down, I will lose with my call, but I will compensate with my put. Okay, it's the combination of the two. This is for now. I hope you understand.
This is a very simple version to summarize it. And
yeah, it's a simple version. Okay, then somebody says, why do you use 80-20 and not 50-50? The reason is very simple. Okay, but it's all about you. I mean, I prefer to work 80-20. If you prefer to do 50-50 or 20-80, more trading and less defensive investment, it's all yours. Okay, all I'm telling you is, I know that if you are young and you're in your 30s, 40s, whatever, you have a good job, you make some money, and you want to retire in 20, 25 years, it's very important that a large part of your money is not being lost. You need to protect your wealth. You need to grow at 8%. This is what I'm trying to tell you. If you have 100,000 in 30 years' time, you could be at $1 million. Now, if that's not good enough, then look for somebody else. But if you think, if I have 100,000 and in 30 years' time I can make $1 million by doing a strategy that I protect my wealth, I have a big chance that I can get there. That to me makes sense. Okay, so therefore I say 80% should be focused on a defensive strategy. Now, another thing I have to tell you. Once you understand this strategy, okay, there's no need to watch the screen 24 hours a day to see whether the market is going up or down or whatever. No, you structured your money with a decent strategy. It all takes care of himself. Nothing will happen. If something really happens, okay, you will have this mechanism in your portfolio, okay? The call will go down, the put will compensate, and at a certain moment, and I will tell you when, in terms of when is it that I should reposition myself, you have to reposition, okay? You have to take a loss, you have to take the profit, and then you get out and you start again with a new deal, okay? This is the idea. If you make a lot of money in September, I get out of my A-hold, I will sell my call, I will sell my put for remaining premium, and I will start a new deal. This is the idea how I do it. Okay, and I will tell you when to get in, when to get out, how to do it, how to reposition yourself, etc., etc. This is all part of the strategy, of course. Okay?
Yes. So in this case, like so Andrew, I also noticed like like Milan, and later after this event, I also have 2 calls scheduled for the students who are interested with our coaching program. So Milan, she's asking that she would like to know more details about our 1-year coaching structure.
Yes.
Yes. Yeah. Should we go to our landing page or just like a show?
Yeah, well, let me show you, because if I'm talking about what can you expect, I can only tell you what I did over the last 10 years, okay, with this defensive strategy. So I show you the results that I was able to achieve in our program, okay? Now, as you can see, it could also be a little minus or literally almost nothing. It could also be 14% or 16% or whatever, okay? I cannot promise you the fixed 8%, okay? It all depends on my judgment, on the strategy, on how I see the market, etc., etc. But I will guide you. I will guide you with this strategy. But one thing is for sure, you will never see a minus of 50% here, okay? I hope you understand that. So this is what we did in our defensive portfolio. Now, we also run the trading portfolio, and the trading portfolio is a bit more offensive. Now, funny enough, somebody told me, he said, Andre, listen, last year you made 16% on your offensive portfolio, and in your defensive, you made 19. How come? Yeah, that can happen, okay? The trading was a bit more difficult last year. I found it more difficult last year than a lot of years before, okay? So, yeah, and sometimes you have a big hit, like 40. That was really... a bit above average, as I would call it. But sometimes you also have a below average. Okay, so both the ideas, I will run again my portfolio. I will show you the strategies. So this is included in the program, and also included in the program is that I have updates. Okay, and every move I make. So first of all, I'll teach you the strategy. Okay, the ins and outs of the strategy. That will take a bit of time. I think we took 2 days, something like that, in online sessions, more or less. So we do an online session. Maybe we do a one-on-one session. How you say that, a physical session, if it's possible again. But that we can see. But anyway, I want to teach you the theory. That's very important. You have to understand what we're doing. Then we start, and I will show you trades and strategies. Okay. and I will follow up on them. So if I make a move and I say, okay, now I'm going to do this, now I'm going to do that, this is the reason why, and then you should grow into this strategy. You will see it working in real time. This is very important to understand. Okay, so and then if you understand enough, then it's about time to follow up. Okay, so try to be realistic. Okay, I cannot promise you anything. This is just an indication. Okay, all I'm telling you is I thought about the strategy. I know what the good things are. I know what the risks are, because there are risks in every strategy. Also in this strategy, there's risk. Risk, what kind of risk? You can lose premium if nothing happens. So if nothing happens, you lose premium here and you lose premium there. So you have to compensate that. And I will tell you how to do that as well. Okay, so that we have a big chance to make money. Not the biggest money, but a good chance to make money. This is my philosophy, what I'm trying to tell you. Okay. And so whether you have a lot of money to spend or smaller money, I don't care. For me, everybody is equal. Okay. My father had a grocery shop. I'm very simple from nature. Straight is straight. So I'm willing to help. Okay. If you have the motivation, I'm willing to help. If you have no motivation, please stay out of my way. Okay. Because I'm not willing to spend any energy on people who have no motivation. Okay. Do something else. Go to the bank. Let them manage your money and be happy for the rest of your life, I hope. Okay. So if you have the motivation, I'm willing to help you. What was it that I was trying to tell you, to show you about the program? Yeah, I had so much things that I wanted to share with you about Baidu. I have a strategy. Here's my strategy in Baidu. This is actually a position I have on right now. Okay, I told you in the beginning, I like Baidu. Okay, why? Now, very simple. It went up to $350 last year. In February last year, the stock was at 350. Incredible. I didn't touch it. I missed it, by the way, because I was not focusing on this stock. But then it came down and down and down. And I read about China. I read about these companies. And I saw what the Googles were doing. And I saw this is crazy. The Googles came more expensive. And the Baidus went down. Now, 2 or 3 years ago, I did a trade in Baidu. That was okay. So I said, okay, maybe I take another look. Now, recently, I saw the stock, and hopefully I have the chart here. Now, let me see if I have the chart here. Yeah, this is a chart. Or I can explain to you why. Now, this is a chart of Baidu. Now, take a look. This was going on. I have to see because it's a bit dark. This was 2021. This was the top, the 350. Now it went down. And now what I see in my chart, and I learn I will teach you how to read these charts, because it's very important. The timing, of course, is another aspect of trading, but also for investing. Now, what I see here is that there is some support in the market around 135, I guess it is this level. Now, I see it bouncing on this support, and I believe that this whole run up is 100% compensated now to the downside. So I believe this is definitely a good moment to step in. Okay, I think it should be possible for this stock to go up anywhere around the 180s. Okay, over the next couple of months. So I think there is potential there. Now, I want to go in with a smart way. I want to buy my call. I want to buy my put. I want to protect myself if I'm wrong. If the support is broken, you can see a severe break. It could all happen. Okay, I never know for sure. So I protect myself. So I step in. Now I will tell you the position, but the result is this sheet. So this is my heat map. So it tells me what I'm in. So right now I step in 150. I stepped in at, I think, something like 140, 145. Okay, we are currently trading, by the way, today we are up 152.68. So we are anywhere here in this area here. Now, this is January, and I have a position running for the next year. Now, if I'm right, and the Baidu is going up in this area, 180, 185, I am trying to get around, let's say $4,000, something like that. I think this is the amount. Okay, based on an investment of receiving $900. So it's a bit complicated, but so it's a huge return. and it's a nice profit, and I will make 20% of my money. Okay, so that is 20%, 19%. This is if I'm right at 185 in the next months. So you can see that if I'm right in February, I already make 26. Okay, if I'm right in next year, then the maximum is this 44K. Okay, so what you see now, what's happened now. If we go back to 250, I don't expect that, but anything can happen, as you know. So if we go back to 250, that would mean that I can make a 61% return. That's fine. But what if we go down to, let's say, 135, for instance, the last support level? That would mean that I will lose 12%. Now, if I go down to 100, what would that mean? Then it would mean, in this case, I would lose 35%. So it's still possible that I lose. By the way, this is a trade. This is not a defensive 80% portfolio strategy. This is a higher risk, okay? Higher return, higher risk, to be fair in this one. Now, my risk here is anywhere between, let's say, 10 and 35%, okay? But my upside is anywhere between 0 and 60%. Now, the point is this. I have an asymmetrical risk-return profile. And this is what I'm looking for. So I don't step in and say, oh, great company, I buy the stock and let's see what's happening. No, I want to go in clever. I want to see, okay, how can I make money on an investment like about 1,000 euros? I try to make 4,000. That's incredible return, right? So with leverage, this is a great return, but there's still a lot of risk involved. So this I won't play with 80% of my money. This I will play with 20% of my money, okay? So basically what you need for this is, first of all, understand where we are, looking for timing, looking for a moment, looking for the moment to step in. So this is something I'm going to teach you, how to read these charts. Then the strategy itself. So what is it that I do? You see calls and puts, you see them here. So I will show you how this strategy looks like. So I will buy a call, a longer term call. I will buy, in this case, a put. You remember that one? I buy a call, I buy a put, but that's not the only thing I'm doing. So this is step number 1. This is step number 2. And then I will teach you how to sell options in a certain way. So that in the end, what I invest is even something like $900, okay? $900. And what I can make is 4,000, okay? So this is a trade. There's nothing to do with the defensive portfolio. Okay, so so this is something I can show you and I can teach you, and then you can see that in a graph. You can see how it goes. What is it that I will probably earn on the 1st of June? What my strategy will be in August or in September? You can all make a simulation. Okay, when is it that I'm going to make money? How much money? And how does that relate to the risk that we have? And how much risk are we willing to take? Okay, I can get out earlier, right? I don't need to lose 20% if I don't want on the money. But there has to be a decent risk, but a bigger return. This is what I'm looking for. Okay. And again, yeah, I wish I could do this in an hour time, but that's impossible. Okay.
Indeed, actually, like I think up to now is you're really giving us a lot of very enriched and also quite updated like information about this current market, and but of course, like it's we cannot develop any of our like own investment strategy, because while you were sharing about like okay, if the market goes down, what do? It's actually putting me back with my history. I was in the real estate, in the cryptocurrency, in the stocks, and when everything goes good, I buy more. But when the market goes down, and what I did is just cross the finger and wish my good luck, and market will go back. And every time
buy and hope strategy, and sometimes it will be, and sometimes will be buy and pray.
Yeah. And like when the market goes back, I immediately withdraw my money and I stopped. So therefore, I think as for the I believe everyone who comes to join us tonight, and we really have the motivation. Like this is what you said. That is a key foundation.
Yeah.
And but the important thing is we need to have the environment. We need to have the coach, and we need to have the structure, and we need to have the information. So so therefore, I think this is all included with our 1 year trading course program. Yeah. So Andrew, do you think you can quickly show us like how the system look like where you upload all those like 3 or 4 days, the market trend, the videos. So
maybe Tom can show you a bit. Let me tell you one more thing, because you're talking about real estate, and I know a lot of people buy real estate, okay?
yeah,
I think in general, real estate is fine. But there's one important difference between real estate and the stock market. Can you buy a put to protect for downturn in real estate? No. Can you sell out at any moment, on every second? If you say, I want to sell, are you sure that you can sell it? Yes,
No.
if the market goes up, you can sell it in a moment. But if the market goes down, you have to wait for a buyer to turn up. In the financial markets, if I want to step out of this strategy, I just press a button and I'm out right away. Okay? This is a big advantage. If I want to protect myself, I can, because these instruments are there. This to me is the most important thing. Okay? So again, this is what I learned from how people behave in financial markets, from what I saw. So this is why I changed the whole philosophy, and I tried to explain to you why. And so this, I believe, is very important. Okay.
Indeed.
So anyway, anyone who is interested to find out more what the program looks like, what's included and what's not, what are the costs, blah, 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 please let them type in their names and we will stay in touch. Tom or you, Gabi, will contact them. We can explain about the program. And it's a 1-year program, theory and practice mixed. And I will guide you through the next year. So whatever you need.
I think it's good to sum up some things we will do in this course.
Yes.
So people will get a 2-day introduction course, 2 private coaching sessions with you. Every month, video updates about the current positions. They get access to our education portal. They get updates through our website, email, and WhatsApp.
Mm-hmm.
Access to all our courses. Access to, of course, a group that are like-minded people. Access to unique content, just special for the group who's following this program, and they can use us to ask questions and everything they want.
Well, I started to smile if you watch me. Thank you, Tom, for giving. By the way, Tom is my son, as you can mention from the last name, and he's taking care of all the technical things, but also about the company and the program. I'm more from the content, and Tom is taking care of the rest, which is great, working together as father and son. So what Tom just said is an overview of what we have to offer. What is interesting here is I saw Dan, he is reacting, and he says, yeah, great, I would like to be on part, but is there an early bird discount? Now, this to me sounds like a Dutch guy asking for a discount. So I hoped that we have these serious investors from China saying, okay, if it's good, I pay the price. I'm not going to trade. But you see, you are great traders already. You're asking for discounts here, okay?